Be Wealthy and Smart, episode 1326.
Step into a world of wealth and financial freedom without budgets, boredom, or bosses on Be Wealthy and Smart. And now, here's your host, Linda P. Jones.
Welcome to Be Wealthy and Smart. I'm Linda P. Jones, America's Wealth Mentor, empowering women and men worldwide to financial freedom. On today's show, we're going to talk about a crypto tax update because it seems like there's a lot of misunderstanding about crypto tax. Some of that may be because there's many people new to crypto since the Bitcoin ETFs came on board this year, or it may be that the information out there is a bit confusing. So I hope to clear all that up today and give you an important resource for helping you to file your crypto taxes. So recently, cryptocurrency has become a priority area for the IRS. And there is a yes or no question on the 1040 where the IRS asks if you own digital assets. Now, digital assets can refer to crypto, stablecoins, NFTs, and more. But what you need to understand is you must answer yes if you sold crypto, traded one coin for another, received digital currency as payment, reward or award, or received an airdrop. Now, the confusing thing is you could answer no legally if you just bought crypto with US dollars and still hold the asset. But if you received an airdrop on that asset, then you do have to declare that you have crypto. So you definitely want to say yes if you're in the crypto market, because otherwise the IRS could argue there's willfulness in intentionally violating the law if you said no and you do have digital assets that you purchased. However, in another confusing turn, the 2023 digital asset question does not apply to Bitcoin futures ETFs or spot Bitcoin ETFs. So it only refers to the cryptocurrency, not the ETFs, which are considered securities, of course. So when you trade crypto, your profit or loss is calculated based on how much you paid for the asset, what you sold the asset for, and that gain then is looked at under what period of time you held it. This is the same way that stocks or real estate or other things are treated. If you hold crypto for more than 1 year, you'll qualify for long-term capital gains treatment, which is, depending on your income bracket, could be 0% or 15 or 20% tax. If you held it under a year, it's a short-term capital gain, and regular income taxes apply at your regular bracket rate, which could be much higher than 20%. So you want to be really careful if you're taking short-term gains that you understand they could be taxed as high as your income tax bracket. So a good strategy is really to try to keep your crypto for at least a year. That could cut your rate in half if you're a high-income individual. So that would be definitely a preferable scenario that you want to be aware of, the date that you bought your crypto so that you can hold it for at least a year. I know for some, they're active traders, and other people are just buy and hold investors. And others of us that have been in crypto for a while are receiving airdrops. But one thing's for sure, the IRS is going to want you to report all of those things. And sometimes it's very difficult to keep track of exactly what you bought, especially if you took one crypto, let's say XLM, and traded it for another crypto, let's say Solana, keeping track of the original cost, the gain on XLM, what the price of XLM was before you bought Solana. All of that is best tracked by software. And the software program that I recommend is Coinly. Coinly does a really good job of keeping track of everything that you've bought on exchanges and in your wallets. And it makes calculating your taxes so much easier. And if you're interested in using a software like that, you can save $20 by using the link that I'll provide for you. And this is an ad for Coinly. If you do purchase Coinly, I will make a small commission on it. But mostly it's important to just have something like that that calculates everything for you. This can be so confusing and so overwhelming, and when it comes to tax time, the last thing you want to do is be fumbling around about what gains or losses you have with crypto. But make no mistake, if you sell one crypto for another, that is a taxable event. I've heard some people be confused about that and think if you don't go back to US dollars that it's not a taxable event, and that's not the case. If you sell one crypto and you buy another crypto, that is a taxable event. And if there is a gain, whether it's short-term or long-term capital gain, you will owe tax on that. Trying to keep track of this yourself can be so overwhelming, and once you have more than 5 transactions, doing this on a spreadsheet just doesn't work anymore. So do yourself a favor and get an automated system like Coinly. And one tax tip for you. Crypto is taxed differently than stocks are. And that means that if you have a loss in crypto, you can take the loss by selling your crypto, and then you can buy the crypto back immediately. That way you've locked in the loss, but you still own your crypto position. That's different from stocks because if you take a loss in the stock market, you have to wait 30 days to buy your stock back. Otherwise, it's considered a wash sale, and it's not allowed by the IRS. But in crypto, it's perfectly legal for you because there's no wash sale rule. If you bought a crypto position for $100, it went down to $50, sell the crypto, lock in the $50 loss, and then buy it right back. Then, in the future, when you sell any of your cryptos at a gain, you can use that loss to offset some of your gains and reduce your income tax due on your crypto gains. Short-term losses offset short-term gains, long-term losses offset long-term gains. Whatever you do, I really advise you to be aware of the short and long-term capital gain situation. There's nothing worse than selling and racking up a lot of short-term capital gains only to reinvest and have the crypto drop further, and you owe gains on something that now is at a loss. One thing you might consider is that we are in the part of the crypto cycle that is a bull market again. And that means we're likely to see crypto move on the upside for the next year or two. That gives you plenty of room for your gains to be long-term capital gains and for you to hold your profits for over a year and therefore dramatically reduce your potential capital gains tax. Long-term gains are the way to go when you can do it. So good luck filing your taxes this year. If you need help, definitely check out Coinly. If you haven't subscribed to Be Wealthy and Smart, hit the subscribe button and you'll be notified as soon as new podcasts are available. And all of my podcasts are on my website at lindapjones.com/podcasts. And while you're there, sign up for my weekly newsletter for more tips for your financial freedom. That's all for today. Until next time, live the good life and be wealthy and smart.
Thank you for listening to Be Wealthy and Smart with Linda P. Jones. Share the wealth and tell your family and friends about the show. Check out our website, blog, and social media for more riches at www.bewealthyandsmart.com.